Hey guys, it's Angelo Christian with Real Estate Insider. Today we're actually breaking down, going back to school, teaching you what are closing costs. Maybe you're a first-time buyer, maybe you're a millennial, maybe you need a refresher and you're trying to recall or learn before you buy a house, before you refinance, before you get into something, what are the actual closing costs? Buying real estate, whether you're an investor, you're experienced, you're a savvy entrepreneur, or you're a newbie just getting started, is extremely intimidating. And seeing all the different types of closing costs that are out there, tens of thousands, you know, a lot of money, you got to know what they are and what's the appropriate fees to pay. Because sometimes, you know, you don't want to get ripped off and someone's overcharging you or gouging you. You got to make sure that you know what you know, because what you don't know can hurt you. And you want to know about closing costs. They're very, very important. So today we're actually be talking about the different types of closing costs, what the expectations are, so before you get into a deal, you know. So closing costs. When you are getting real estate, you are going to have closing costs. I don't care what you see on TV with the radio guy or the ad, he says no closing fees. Somebody's paying those closing costs, okay? Believe it or not. And you got to make sure you know what they are. So first thing is an appraisal. An appraisal is a real estate appraiser, an independent third party will come out to appraise the property. For residential properties, this fee can be anywhere from $400 to $700 on average. Somewhere in there is what you're going to pay. That's for them to determine the market value of the home. If you're under contract to buy a house for $500,000, how do you know it's worth $500,000? Oh, let me get an independent third party appraiser to determine the value. Okay, if it's commercial, a commercial appraisal can be $2,000, $3,000, $4,000, depending on the property. You got to make sure that you get a third party, not that the seller picks, that you pick that's reputable and that's bonded and insured to give you the right valuation of that property to make sure you're getting a good deal. The second thing is an inspection. Okay, I'm going to buy this piece of real estate. I'm going to buy a home. It's a $500,000 home. I need to get it inspected. I don't know about a roof. I don't know about plumbing. I don't know about a foundation. Do you know about it? Let me go hire an expert that knows about inspection, about the foundation, about the plumbing, about the roof, that knows all of these things. So you have to hire an inspector. For a home, an inspection can be, depending on the size of the home, an average inspection can be $300 to $400. And they're usually licensed, they're certified, they're bonded, they're insured. You want to get someone that has good reviews. But you got to make sure that property is kosher, because you don't want to go buy a house and then the foundation's messed up, right? Same thing. So you got to make sure that you get inspected. Insurance. You're going to have to get homeowners insurance or property insurance on your property, right? The lender's not going to make a loan to you if you don't have the property insured. And let's say that, you know, God forbid, the house catches on fire or they get hit by a tornado or hurricane. You have to make sure you have insurance on the property. Insurance is usually 1%, 0.5% to 1% of the value of the property. So if you have a $500,000 home, you could pay anywhere from $2,500 to $5,000 annually for your insurance on your home, your homeowner's insurance. But it's essential. Again, you have to make sure you go with someone that has high reviews, licensed, bonded, insured, but you need to have homeowner's insurance. You got to pay for that at the closing table, usually 1 year of insurance at closing. The next thing is you're going to have lender fees. The bank is going to make a loan to you. They're going to have either points or origination fees. They're going to have underwriting fees, processing fees, doc prep fees. It can usually be 1% to 2% of your loan amount. Okay? Now with us, we can either waive those fees or get them financed into your loan depending on the program, but lenders they need to make money. That's how they stay in business. So keep that in mind when you're getting a loan. You're talking to a bank, a credit union, a mortgage company, a broker, that you're going to have these fees that you have to pay, right? And they can be either paid by the seller if you're doing a purchase, or they can be financed into the loan. A lot of different opportunities how to structure that. So you're going to have lender fees. Then you're going to have title fees. Oh my God, Angelo, what are all these fees? God, it makes it almost like you don't want to get a property. No, you need these things. It's essential. Title fees is to ensure the title to the property. If you're buying someone else's property, right? I've seen this before a million times. There's a transaction and there's a lien on that property, like an IRS lien, a tax lien, and you go buy that home. Now that tax lien gets attached to you. So what happens is you can't sell your house because there's a lien that's sitting on there, and you try to sell your house, it's blocked, it's stopped from selling because there's a lien on the property. So you have to have title insurance. You're going to pay title fees, usually up to 1% of the loan amount, to insure the title, to protect you, because when there's a conveyance of title from a seller to a buyer, they have to make sure there's a clear title, and that clear title can be transferred over to you, and you don't have an issue taking over that title. If there's an encumbrance, they have to get all those defects cleared before the title can be transferred over to you to make sure you can take clear title. So very, very powerful. Then you're gonna have realtor broker fees. Usually realtors get paid anywhere from 1 to 3% on the buy and sell side. Somebody has to pay for those broker fees. Usually if you're a buyer, the seller will pay for the buyer and the seller broker fees. You don't normally have to pay for those, but they are there. Okay, and you'll see you're going to get a closing disclosure, and on that closing disclosure, I'll itemize all the fees that you're going to have. Okay, so you'll have all this listed there, but you're going to have these. Just be mindful. Then you're going to have a home warranty. If you're buying a home or you're buying a commercial property, you want to make sure that you have a home warranty. Home warranties are usually anywhere from $400 to $700 for a residential home. It can be several thousand for commercial. In case something happens, it breaks down, you have someone that can come out there, a vendor, to repair the dishwasher, that can repair the gutters, that can fix the AC, that can repair the furnace, right? You want to have a warranty that warranties the house in case something happens. Again, search for someone that has good reviews, that's reputable, that's trustworthy, but you need to make sure that you get a home warranty. Escrow fees, you're going to have to, if you're, depending on the state that you're closed, like California, aside from a title company, you also have to pay someone, an escrow officer, to close your loan. And you could pay them anywhere from $300 to $1,000 to do the escrow. You're an escrow, not just for the escrow officer, but if you're paying for, like you're getting a property and you pay property taxes and insurance, you have to create an escrow account. And you have to put in that escrow account usually 12 to 15 months of insurance and 3 to 4 months of taxes in your escrow account. And that can be very expensive depending on the price of the home that you're purchasing. But if your taxes and insurance are included in your house payment, that escrow has to be included in there. And you have to pay for that at settlement, okay? Then you also have transfer tax. This is taxes when you're buying property. Like you're buying a property in Florida, you have dock stamps, you have transfer taxes, like in the state of New York, the state of Pennsylvania, you have transfer taxes. And those are usually 1% of the loan amount, right? In some states, like in going back to the title, in like Oklahoma, it's an abstract state. So sometimes you have to pay to build an abstract. So you have all these things that you have when you're buying a home. And lastly, you have agency fees. If you're doing a VA, you have to pay the VA 2.15% of the loan amount. If you're buying a $100,000 home, you have to pay the VA $2,150 to guarantee that loan. If you're doing an FHA loan, it's 1.75%. Agency fees. If you're getting a $100,000 home with the FHA, $1,750 goes to the FHA to guarantee that loan for you. If you're doing USDA, you got to pay them 1%, right? If you're getting a $300,000 home with the USDA, it's how much? 300,000 times 1%. That's $3,000 that you have to pay the USDA. So you have all these settlement charges, guys, that whenever you're getting a home loan that are really, really important that you have to be mindful of. So pay attention to this, because you can't walk into this and think that you're just going to get a house and you don't have to shell any money out of pocket. If you think that, it ain't going to happen. And you need to set the right expectations for yourself to know. Now, I will tell you, with our programs, a lot of the programs that we structure, we can get a lot of this stuff rolled into the loan or paid by the seller, so you don't have to pay it out of pocket. There's a lot of ways, creative ways on how to do that, because closing costs can be anywhere from 1% to 6%, depending on the type of loan that you're getting. And thankfully with our company, we're a nationwide lender. We've been doing this for over 2 decades and help tens of thousands of people every single year, and we have one of the best reviews online. But we can help to get these closing costs included because it gets expensive. You have down payment, and down payment is separate than closing costs. You have a down payment, like with the FHA, is 3.5%, and then you have closing costs. Those are another 2 to 3%. Right? You have to pay for all these things. With us, we can help to get those closing costs included, but it's important and mindful so you're aware, so that way you know what you're walking into, what the appropriate rates are for these, so you don't get ripped off. So anyway, I'm really glad you watched this. If we can help you, call our office at 832-431-6331. We're a nationwide commercial residential lender. You can also click on that link below to get signed up to get pre-approved. We'd love to help you to get you pre-approved. We're doing all the FHA, VA, USDA, conventional. jumbo programs. I want you to also check out my video I just shot on the 1 year self-employed. Check that video out, guys. Thank you.